Hello, ladies and gentlemen. I'm Joseph Novichkov, Senior Trading Manager with GDM. Today, we're going to talk a little bit about the FOMC. What we saw today in the headlines, we saw that the US dollar index erased earlier gains on Wednesday afternoon. Of course, that was after the comments of the Federal Open Market Committee that actually said that next interest rate hike could come relatively soon. That's a quote. And of course, the policy meeting showed policymakers, though it may be appropriate to raise interest rates fairly soon, should of course depend on jobs and inflation data. So what we see is a continuing fear among the Federal Reserve of the Trump next future policy. Well, this is also what we're gathering throughout the events that are happening throughout the trading days as we're going through. We saw that in yesterday's session, the euro managed to slide below the 1.05 area versus the dollar. However, after the announcement from the Federal Open Market Committee, we saw the euro climbing back against the dollar to go back above the 50 exponential moving average and to trade relatively flat right now at 1.0554 versus the USD. It is stuck in a very relatively tight range at the moment. Sterling is also sidelining against the dollar. Nothing major happening over there. No major news today for the British economy. The JPY also struggling against the dollar. However, the pair is relatively flat at the moment. However, let's have a look at gold prices. Gold prices are also quite little changed at the moment at 1237.60, and of course that was after the bounce off of the 1233 area, which was the 200 exponential moving average, providing support for the precious metal, and of course probably going to aim for further gains should the area of 1239 and 1242 be surpassed by the price action throughout the European session and the US session as well. However, what I wanted to focus on was yesterday's readings of the existing home sales and, of course, the home sales change. They came pretty much above expectations, 5.69 million against 5.54 million. This is for existing home sales, and 3.3%. That's 2.2% above expectations, which was 1.1. The existing home sales change. You can see how relatively good data we have received in the previous session. However, gold prices slid, of course, after this announcement, but quickly climbed up as the Dixie also erased gains. But one of the things that we're going to be looking at today, this is oil prices, and we are confident that prices could gain towards the 55 area again, and should it be surpassed, we can see areas about 55.50 and of course $56 a barrel in the near term. And this is after the American Petroleum Institute's weekly report came out with 884,000 barrels of existing crude supplies right now versus the previous of almost 10 million barrels a week. And of course today we would be looking at the Energy Information Administration, which would come out with the actual governmental report of the crude stocks, and this would be the main driving force for crude prices until the rest of the week and the beginning of the next one. However, this is the weekly U.S. job data, the initial and continuing job data during the which we are going to witness some moderate to high volatility depending on the outcome. And as the Federal Reserve have announced in yesterday's minutes, we saw that the next Fed rate hike would depend on job and inflation data. Therefore, every piece of information that we receive on a weekly basis from the job and inflation data would be very important for the timing of the next interest rate hike, which of course could occur in the several weeks from now. This would be, hold on a second, I have it here. This would be on Wednesday, March 15. This is when we have scheduled the Federal interest rate decision, and of course the FOMC economic projections, also a monetary policy statement. But before that, we would have the consumer price index, which is also the inflationary data that the Federal Reserve is actually looking at. However, before that, 5 days earlier, that's March 10, Friday, non-farm payrolls and unemployment rate. This is also the next thing the Federal Reserve will be looking at. And of course, today we will be trading oil, and that would be also probably supported by the Energy Information Administration report later into the trading day. Thank you for watching. I'll see you tomorrow again. Bye-bye.